What it is, Brad Lee back again with another episode of Dropping Bombs. Today, folks, like every other day, I've got a real treat this time. Financial advisor, expert, Rob Luna. What's cracking?
What's going on, Brad?
Folks, if you guys haven't heard of Rob Luna, you will. He's getting more and more known because of his expertise in the financial industry. Apparently, all the bigwigs with all the dough, turns out, give him all their money so he can invest it and make them more, which is why they're bigwigs and wealthy. You're their little secret.
I'm a secret. Let's open the secret up to some of the audience so we could all get wealthy.
Well, that's what's happening. And what do you have, like a bunch of degrees from, Wharton and shit?
Yeah, we got some of that. Wharton, UCLA Anderson, National University of Singapore, Arizona State.
And you're a little bit of a OCD-ish when it comes to numbers, aren't you?
I love numbers. Numbers can't lie. The good thing about numbers is no one can bullshit you. At the end of the day, they got to put the numbers in front of you, and balance sheet tells the whole story, everything you need to know.
Dude, what made you desire to go to Ivy League schools, being from the, a poor family?
Yeah, no, I had no desire. I didn't even know what an Ivy League school was until I was in my 20s, Brad. It was one of those things. I told this story before. Wrestling kind of pulled me out of the streets, put me into a position to go to college in the first place. And my second year in college, sophomore year, that's when we used to go to the newspaper to look for jobs, and there was this big ad that said stockbroker trainee. I said, well, shit, stockbrokers, I think those guys make money. Trainees, let me go do that. 19 years old, went to Waterhouse. They hired me for their trainee program, and I just knew that was the opportunity that I was going to get in life, and I knew I was only going to get one. So I went head in, man. I got into it. My whole goal is let me just be the best I can be at this, and that's what I tell everyone, man. I think I could make millions of dollars doing just about anything, but it's find that one thing and really crush it and kick ass. And especially today, information's free. Anyone can find out about how to manage money, how to pick stocks, how to pick bonds, Bitcoin. But that actually is a hindrance also, because how do you take all that information, especially online, be able to tell what's bullshit, and then put it into a formula that you can actually execute on and is meaningful to you? And that's kind of what I help people do.
For the last 22 years, you've done that, and you built a company that then you sold to a publicly traded company, and you cashed out in a big, huge way.
Yeah, it was a good exit. I only exited 70%, though. I still own, and I own 28%. The math doesn't add up. I gifted, at the sale, I was 100% owner. I gifted 2% to two key employees. I own 28% now. I have an employment contract till next year, so still part of that. When they bought me out, it was a Canadian publicly traded company, wanted to move into the U.S. and take on the U.S. RIA marketplace. What's kind of cool is we were just under $1 billion when they bought us out. My job was to kind of do M&A. We're up to about $70 billion in the U.S., $200 billion total now. By next year, we'll probably be the largest RIA firm in the U.S., and we're also listed on the New York Stock Exchange now, so it's been a good run.
That's right. So, suffice to say, you know what you're doing.
When it comes to finance, I do. Outside of that,
because you've not only made your dough, but you take a lot of wealthy individuals' money and manage it for them.
Right.
And that's a lot of risk sometimes.
Yeah, I mean, it's as much risk as people want to take, right? But we build multi-asset class, global diversified portfolios. So depending on the net worth, we work with a lot of family offices also. That can mean investing in things like wine futures, classic cars, fine art, as well as the traditional asset classes. So when it comes down to investing, it's kind of my passion, and created these diversified portfolios for high net worth individuals.
By the way, just in case I forget, go to robluna.com, Luna. Also, you find him on social media at the Luna Rob. I guess Rob Luna was taken on Instagram.
He was taken, yeah, exactly.
At the Luna Rob on Instagram. He drops nuggets and little bits for financial plays left and right. So if you guys want to get wealthy or kind of start learning that, make sure you follow him. Let me ask you, what's up with the Bitcoin craze? Now, again, I personally, I know it's not a craze in my mind. I'm going to ask you because I don't think it is. I got offered Bitcoin when it was $600.
Wow.
No, I'm sorry, $50. And I said, well, where can you spend it? They're like, well, you can't. And I'm like, well, why would I want a bunch of shit I can't spend? This dude, a bunch of tech nerds trading freaking a Bitcoin. I thought it was stupid.
Yeah.
Then at $600, Somebody gave me 100 of them because they owed me 60 grand. And I'm like, sure, I'll take Bitcoin. Then someone gave me 20 of them.
20 whole Bitcoins.
Yeah. Yeah. A whole coin.
Yeah, each one's 50 grand now.
Now. But then it was $600. So the guy was walking out of this studio. We filmed Poker VT here, and I had the Poker VT table. It was a full-on poker table with cameras and all that.
Yeah.
And the guy says, what do you want for that? I said, I don't know. You know, it was technically in my way. I was just going to get rid of it. And he said, hey, I'll give you 3 Bitcoin. I said, all right. And he gave me 3 Bitcoin. And they were in town visiting. You got any extra cash on you? I said, do you need cash? He said, yeah. Now, these guys they had just had a bunch of Bitcoin. By the way, the one dude that opened his Bitcoin wallet had $16 million in Bitcoin in that wallet. And supposedly it was one wallet. And they were $600 then. And he had 16 million of them. So he transferred me the 60 Bitcoin, then 3 Bitcoin for the table. And then at my house, he needed 2,000. He wanted cash. So I said, sure, I can give you some cash. He said, I'll give you, I think, 4 Bitcoin for $2,000, which is $2,400. And I'm thinking, okay, it's going to be $1,000 soon. It's going to be $1,000 soon. So I said, sure, okay. So I gave him $2,000. Everyone said I was getting scammed. This was at 600.
Mm-hmm.
And then it went to 1,000. Then it went to 5,000. Then it went to like 8,000. And I'm thinking, dude, I got to get rid of this shit. You know, so I'm thinking about selling it. Fortunately, I didn't sell it all, but I did sell a bunch. My dumbass. What's up with Bitcoin?
Yeah, dude. I mean, I agree, and you're not alone. I think, especially in my industry, financial services, no one buys into that stuff, right? They're extremely skeptical. No one wants to do that, and it's counter.
Before, you mean?
Before.
Yeah, because banks are doing it now, aren't they?
Yeah, well, now. Yeah, once it's, you heard BlackRock, the biggest asset manager in the world, about 2 weeks ago, finally got on board. Bank of New York Mellon, oldest bank in the U.S., got on board about 2-3 months ago.
Elon bought $1 million.
Elon bought $1 billion, so they're always late to the game. But I think at the end of the day, let's talk about Bitcoin. I was actually just on a call with a few other people with former head chair Ben Bernanke talking about Bitcoin also, so I can give you some perspective from that. The challenge is fiat currencies, right? Around the world of the globe, all central banks are essentially printing currency after currency after currency. And after we got off the gold standard, it was basically just a big Ponzi scheme to continue to print money. And I think most people have gotten away with that for quite a while. I'll tell you something though. A lot of people talk crap about the millennial generation. Some of these guys that are actually mining the Bitcoin, they don't believe in fiat currencies. And I've had same stories, people that have come into my office, say, I've got 12 million to invest. How did you get that? I put 10 grand into Bitcoin way back then, right? And so it's worked out. People are starting to call bluff of fiat currencies. And you've seen that happen not only in Bitcoin. If you look at the fine art market starting to take off, if you look at collectible cards, I know Vanderchuk's one who talks a lot about PSA graded sports memorabilia. Anything that is a tangible... Gary V.
Oh, Vaynerchuk.
Yeah. So Gary V. So anything that is a tangible asset that has limited quantity, everybody, same thing with fine wine right now, those assets are skyrocketing. So Bitcoin, it's collecting it, but this is really a global phenomenon away from fiat currencies. Now, Bitcoin, I do think, could potentially become the new gold because it is a lot easier to transact. It's never going to be a replacement for the dollar, though.
Why?
It's not going to be a replacement for the dollar. I don't want to say never, but the volatility of it is just way too much. I was just we were getting off the plane with somebody, probably a rapper, it seems like an artist. He was getting off and someone had just transferred him 30 grand for an appearance that he did. He's like, oh shit. And he looks at it, next thing he's on the phone. He's like, dude, it's like 18 grand now. You can't, what happens if your bank account with your dollars that you need to spend for reserves were fluctuating 10, 20, 30% a day? It's just way, way too volatile. But Bitcoin, and most people that are experts, and I'm not an expert in cryptocurrency, but from our perspective, is more a store of wealth like gold. Gold is a store of wealth. Now, there's other coins, whether it's Bitcoin Cash and other things that are set to be able to replicate the dollar potentially. Bernanke was saying that they're thinking of essentially creating a cryptocurrency to replace the U.S. dollar eventually. But what does that really mean? It really just means the same bullshit that they're doing with the dollar, but it's going to be a digital asset.
Well, it's already a digital asset.
The dollar.
Yeah.
I mean, essentially it is. Right?
It has to be.
Yeah.
Because guess what? When I spend $9, nobody goes into my account and removes 9 $1 bills.
Right.
It's all digital. It's all ones and zeros. It's already cryptocurrency.
It is. I think at some point in time, though, I think the biggest risk to Bitcoin or it's not the U.S. doing that. The biggest risk is they say, okay, all central banks around the world, right, unite and say, just like we were on the gold standard, maybe it is Bitcoin. We're all going to tie our currency to Bitcoin. If they do that, Bitcoin would go through the roof. Or what if they create their own cryptocurrency and say we're all going to tie to that?
Well, I think that's what's going to happen.
Yeah, and that's a huge risk to Bitcoin.
But I think that's what's going to happen because like the U.S. government, they'll make a U.S. coin.
Yeah.
And then, like you said, that's just like the dollar, except for now there's no more paper. It's all credit based. But technically, it already is.
Yep.
Do you walk around with $1 million? No. Do you have $1 million?
In my bank.
Yeah, it's not in your bank, bro.
Right.
That's the point.
It's a digital number, right?
It's just a frickin'. It's just
if everyone went to go get their cash out of the bank, you'd have a run on the bank. That'd be a lot of trouble.
It'd be over. That's my point.
We saw that in 08, right?
So
we saw that in 08, 09.
But isn't that digital then?
No, it absolutely is. Yeah. It absolutely is.
So it's digital. It's already digital. The fact that it's backed by a coin, what is a Bitcoin? You know what it is, by the way? I'll make you a digital coin expert. You know what it is?
Yeah. No. Yeah.
It's a reward for adding a blockchain to the blockchain.
Right.
You know what the blockchain is? Literally an unfuckable ledger.
Mm-hmm.
It's a ledger you can't fuck.
Right.
And everything else you can fuck. I'm telling you, it's an unfuckable ledger, dude. Mm-hmm. And that's what I bank on because you can't fuck with that entry.
Right.
No corruption can fuck with that entry. That's valuable, dude. And when you solve one of these blocks, which allows more data on it, you get rewarded by a Bitcoin, and there's only so many Bitcoin. And a lot of them have been lost already. So literally, dude, there's a limited supply, and it's based on the blockchain, and I believe in the blockchain, which is why I believe in Bitcoin. I don't think Bitcoin's going anywhere because of the blockchain.
No, it's definitely not going anywhere.
Banks are going to the blockchain.
The question is the value of it, right? It's not going anywhere. The question is what's the value of it long term. That's the challenge. I think the best upside catalyst for Bitcoin could potentially be that cryptocurrency that everyone ties to is Bitcoin. I mean, why create your own coin for nothing, especially when BNY Mellon's adopted it, especially when the largest global asset manager, BlackRock, in the world has adopted it. So I think that's the thing I think you have to have something in Bitcoin. At the end of the day, is it going to be the coin? Is this going to be, you hear people $2-3 million. I don't know about that, but I think if you don't have a part of your portfolio in crypto, and when you talk about crypto, 85-90% of the market is Bitcoin. And then there's Ethereum, and then there's 1,000 other at fractions of a percent in terms of the whole market. So I do think that could happen. The other thing about it is it's not a registered security yet by the SEC, so there's not an ETF like there is the GLD ETF. Once that happens and it becomes readily tradable on an exchange, you're going to have another wave of people pushing it up. So I think potentially you could see a huge upside move still on Bitcoin because there's a lot of people who still have not gotten into it. And all these Robinhood accounts, all these things, there's going to be more traders, I think, pushing that higher. Where that ultimately ends, I don't know. But some of the data that we've done, the analysis that we've done, it could easily hit 120, 130. And it's only at 50 right
now. Well, you've heard of Cash App, yeah?
What's that?
Cash App?
Yeah.
Yeah, so I open up my Cash App right now. Now, by the way, I didn't do this on purpose, but if I open up Cash App, somebody was wanting money and they couldn't, get a wire and all this stupid shit because they're 18 grand in there in my Cash App. Like, that's mine. And guess what I put in there?
What was it?
A little bit of, like, fractions of a Bitcoin when it was freaking $9,000.
Is that right?
Yeah.
It's crazy.
And now it's $50,000. Yeah. So literally take that down. Like, I only transferred a little bit of money in there so I'd have enough to send this person. And, I didn't do it exact. And now there's 18,000. So that's my worry with Bitcoin. How can it keep sustaining, and where's all this money coming from?
How can the price keep being sustained?
Yeah, like I know a guy that bought it at, let's say, and I'm not shitting you, 75 cents, and he has shit tons of money now. Where's that money coming from? Well, someone needs to buy, want to buy the Bitcoin, right?
Mm-hmm.
So that's supply and demand, right? So what I don't get about it is in other words, why does it go down and why does it go up?
Buyers and sellers. So the days that it goes down, you have more sellers than you do have buyers. That's the same reason stocks fluctuate on a daily basis. Same thing, art prices.
So when it hit 50 grand, a bunch of people said, "Shit, I got to get out of this."
Yeah, they rang the register.
Then it goes down.
And it goes down.
But someone like the government says, "Hey, we're going to start accepting this," or
then it goes up. Then more people come in.
Because my buddy said it'll be $1 million a coin within 5 years, and that was less than 2 years ago. So he's saying in 3 years, that'll be $1 million a coin.
Mm-hmm.
That would make trillionaires.
It would, yeah. No, it'd be crazy. So, I mean, but that's the thing. It's a fixed asset, right? It's just like fine art. And it's a Ponzi scheme. But so is the dollar, so is wine, so is fine art. All of those things are only willing what someone's willing to pay. You know, when they put a piece of art at auction, you know, why do they do that? Is because why don't they just sell it, you know, off market? Well, because they know when they put it at auction, they get the biggest you-know-what there that are going to bid on it. They're going to bid against each other. And you have all these people that are in the room chasing one piece of art, and that's what drives it up. But at the end of the day, what can you do with that? You can't eat it. You can't live in it. That's what they believe the value. And it's the same thing with Bitcoin. The more money that flows into it, it's a fixed supply, right? So the price is just going to have to go higher and higher and higher. And so that's what I'm saying. You know, and one thing I'll tell you, this might not mean a lot. There's something called the Chartered Financial Analyst designation. It's the highest designation you can receive in finance. The society that puts that out, and this is harder to pass than the bar. It's like a 27% acceptance rate. The most esteemed society in finance is now actually creating model portfolios to show how 5, 6, 7% allocation of Bitcoin to a traditional asset allocation model, bonds, stocks, not only increases the return, but it lowers the risk. And so once you have institutions like that doing those things, it then becomes part of an asset allocation model. And asset allocation, all that means, guys, is when you look at endowments, pensions, large financial institutions, every year their board sits down and says, how are we going to allocate our capital? How much to stocks, international, domestic, how much to bonds, how much to alternative assets, real estate, and potentially now how much to cryptocurrency? They're not doing that right now. What happens when pensions start putting that in their investment policy statement where there's even a 3, 4, 5% allocation to cryptocurrency? It's going to skyrocket. Those institutional buyers still have not done that. They're way behind the game because they need 5, 10, 20 years worth of data before they feel confident enough because of litigious reasons to do that. So there's still a lot of catalysts that could push it a lot higher. That being said, it's electronically traded. So like you said, well, why does it go up and down? Well, because you can go and push it up and down, and there's not like the New York Stock Exchange or NASDAQ that puts in trading curbs that halts things so you don't see as much volatility. So it's really a total free market. But from that aspect, I still think, you know, from my perspective, where the big money is with large financial institutions, it hasn't moved there yet, but they're talking about it and it's coming.
Where's the money now?
You know, so gold is a part of a lot of the asset allocation models. And so that's, you know, some of the work that we do and some of the analysis you see is, okay, what if only half of gold is replaced? So if people have a 5% allocation to gold in all these portfolios right now, what if they say, hey, let's do 2.5 gold and 2.5 in crypto? And that's where you start getting some of these numbers. Well, shit, you know, crypto could hit 500,000 or in terms of Bitcoin, 600,000.
Which would be the equivalent of spending $300 an ounce on gold?
Yeah.
Because what is it now, 2,000, 3,000?
Something like that, yeah. And so it's basically just taking all the gold, all the investable gold, and say, let's take a percentage of that allocation that's in endowment models now, move it into crypto. So there's a lot of catalysts. There's going to be a lot of catalysts in terms of large institutional money. It's already going in there, but in terms of pensions and endowments, there's going to be catalysts in terms of making it more available to the average investor, just like they did with gold back in the 90s with the GLD ETF. All those things are coming.
Yeah, but see, like, dude, you had to like study that shit, and you study it every day to know this stuff. The average person has no clue what you're talking about.
Yeah.
What can they do?
Well, they can buy. You know, here's the thing. Here's what made me really wake up to Bitcoin, because I was skeptical also about it, to be honest with you. Once I saw it in my PayPal account, I was like, shit, this is pretty legitimate, right? And I bought some. As soon as I saw that, I said, okay, let me go ahead and buy some. I bought some Ethereum. I bought some Bitcoin. It's easy. Most people have a PayPal account. You can go in there and buy it right in your PayPal account. So if you want to allocate, you know, one thing that we're telling people is Don't go over 5% of your net worth. So if you got a $100,000 portfolio, don't go more than 5,000, and maybe start with 2. So 2 to 5% is what we're telling people, because I do think they're going to give you more efficient portfolios. But remember, guys, when you allocate to that, give it a 5-10 year time horizon, because it's going to be volatile. It's going to go up and down 20, 30, 40% swings. But when it's 2 to 5% of your portfolio, you're not worried about that, right? And if you're looking out longer term in terms of, younger people are asking me, where should I invest long term? I don't need this money for 10, 15 years. To not have some allocation to cryptocurrency does not make a lot of sense.
Why wouldn't you put it all if it's long term?
Well, because it could go nowhere also. It could be where, it's 50 grand now a coin. It could be worth 25. That's a real possibility. It could be worth, why couldn't it be worth 25,000?
Well, because I just highly doubt it. They're limited.
A lot of people have highly doubted that General Motors, Ford wouldn't file bankruptcy and be out of business, and the stock still trades, but they filed bankruptcy. It went to zero. A lot of people highly doubted Enron. A lot of people highly doubted we'd lose how many banks that we did in 2009. It could happen. Just like we said, if all governments or countries around the world, central banks said, we're going to tie to Ethereum or whatever it is, it's definitely going to get hit.
So what should people invest in then that will be around? That the old Wharton professionals
it's diversification, right? I think it's, I like the idea of about 5% in cryptocurrency, and probably most of that because of the size of the market being in Bitcoin. But if you haven't heard about what technology is doing, artificial intelligence is doing, that everyone is becoming a digital company, which everyone's trying to look like a SaaS company right now. Technology is the way of the future. So these DocuSign companies, these Zoom companies,
these LightSpeed
VT companies, like, you were ahead of the game on that, man.
Shit.
I mean, you're just crushing it now, man, because
an
you're
OG.
facilitating. And that's the other thing, right? The big jobs are going away. So there's so many more entrepreneurs right now that are looking to do something to make their mark on the world, and they're doing that digitally. So, not to give you a promotion, but LightSpeed VT, I use it myself, because what I wanted to do was all this information that I'm talking about. Normally it's $5 million to come to us, $50,000 retainer. I wanted to democratize that, but I can't. It's not that I never wanted to work with the guy who had 10 grand. I respect his money as much as someone who has 10 million if he's trying to do the right thing with it. But like I know, Brad, I just don't have the time. So to be able to get on a Zoom, to be able to create a VT program for them to go through and give them 90% of what I'm giving to people that are paying me 50, 200, 300 grand a year for, it's pretty rewarding and it's pretty fulfilling, and the experience is great. So you're going to continue to see more and more of that. And so there's going to be a lot more people going online. So invest in technology, invest in yourself, start a business. Your greatest investment, if you look at your own net worth, Brad, where do you think the vast majority of it is?
LightSpeed.
It's in LightSpeed. So I've made some great...
Shit, it's damn near the only.
Well, yeah, I made great private equity investments, some great stock investments. But when I sold 70% of my business that I started out of my bedroom for nothing, I was like, I've never had an ROI like that, right? So I'll invest in a business.
Yeah, I'll get the biggest payday from LightSpeed.
Absolutely. But that's for most entrepreneurs. 85% of my clients are entrepreneurs pre and post exit, right? They come to me because they're selling their business. Honest truth is, a friend of mine who sold his business for about 175 million, single owner. The year before he sold, he had about 120K in his 401k. That's the only investable asset he had. So technically, he didn't qualify to be a client at a lot of wealth management firms. But then next year, you better believe a lot of people wanted to work with him, right? Because it was all tied up in his business. So that's the thing to understand about entrepreneurs. But that's a risk, obviously, because he forewent investing in stocks, investing more in his 401k, fine art, all those things, because he just kept pumping back into the business. So it was a risk, but it's a risk that paid off. So I'm not saying invest only as an entrepreneur into your business. Do some things along the way. But if you can start a business, man, and you can create a scalable business, most importantly, that has enterprise value, you're not going to do anything better than that. So people that are young, I'm telling them start a business.
Yeah, good advice. Especially, tax advantages, the freedom, the ability to freaking, a lot of people don't talk about how valuable it is to come and go as you please.
Dude, not only that, we work with senior level corporate executives, the C-suite at publicly traded companies. You know how paranoid those guys are when they start making $2-3 million a year salary, right? Because a lot of them are just getting there. They've lived that lifestyle all along. They don't have a war chest. And what if you're a Hilton or Marriott executive, right, that was making $1.52 million a year last year when they basically shut down 70% of the company. Goodbye. Where do you go as a Marriott executive when all your experience is in the hotel hospitality industry and it's all shut down? Where do you go and take that where someone's going to give you $2 million? They're getting $200,000 consulting jobs somewhere, $250,000. And that's the value of having your own business. Not that you're immune to that shit, but you're in control of it yourself. So when the cuts come, you're the ones making that decision. It's not some board who's saying, oh shit, we don't need old Johnny at $2 million. That's an easy out. Let's get him out.
Yeah, but nobody thinks like that, dude. We're all warned, let someone else take the risk. What's the risk?
Yeah.
I'd say work for yourself.
Absolutely.
I would rather have $100,000 a year come in
and own that,
and
100,000.
freedom,
right?
And freedom, because I like freedom, dude.
Yeah.
Then $500,000 a year, and I have to ask Mr. Luna if I can take next week off.
Yeah.
Hey, Mr. Luna, my wife's having a baby, and I was hoping I could take 10 days off, and you say, we need you.
Exactly.
Tell your wife to fuck off, and let's get to work.
Yeah. No.
Dude, I can't stand that. That's worth to me more than money.
No, it's true. And I mean, and hopefully you're going to make more than $100,000 with your own business.
I know,
right?
but I'm just using it because there's a lot of people struggling. $100,000 is actually kind of generous. There's people out there freaking barely making ends meet, and they're like, maybe I should just get a job. It's like, no. You're not valuing the freedom. Mm-hmm. The freedom is valuable if you value it. If you don't value it, if you don't value your freedom, well then, dude, think about getting a job. It's okay to work for somebody.
Oh, dude, I mean, I started my business when I was working for someone else. I mean, the best time to start a business is when you have a job, right? Especially now digitally. Shit, on my VT, I'm working at night. I'm working on weekends. I'm working whatever around. It's not what I do full time, obviously. I'm working 50 hours in my real job. Then I'm working when I can on this. But it's not bad. I mean, I launched it, and in 5 weeks, I think I generated a couple $100,000.
Yeah, dude, you haven't even got started yet.
Not bad.
When it's all said and done, I guarantee you'll never, ever have an investment better than your VT.
That's what you told me.
Watch.
No, it's working out good.
I don't know
so
what the percentage is, but Grant Cardone, okay, let's say 75 G's.
Yep.
Which he didn't pay.
All in at the beginning is what you're saying.
Yeah, because he didn't. I paid it.
Yeah.
So he was too worried to pay it. So I'm like, okay, Grant, you go sell it, bro, and I'll pay for it. How about that? So I had to close his ass that way. So literally zero, dude. We've been doing it for 12 years now. And
he's doing a little better than 75
most
grand.
Of those years, $3 to $5 million a month. Mm-hmm. No, I wouldn't say most. Let me say half. Mm-hmm. $1 million a month, $12 to $20 million a year, almost every single one of the years, except for the first couple. Dude, what kind of return is that? What did he do? He spent a freaking week in here. Now, we can say, well, it took him this long to learn that shit, and it took him that long, and, he spent money on ads. Yes. But the ROI, what is the single highest ROI you think exists right now that people should be looking at?
In terms of the number?
Just investing. Like
the single highest ROI you're going to get is investing in a business.
Like if I gave you $10 million and said, dude, invest it for me, where would that money go?
Oh, is it a passive investor?
Would it be 5% into Bitcoin?
Yeah,
6%?
I mean, as a passive investor, if you're getting double digits, 10, 11%, that's a great rate of return.
What if I could get 12% a quarter?
If you can get 12% a quarter, in a passive investment, I'd be very skeptical of it.
Complete passive.
In a bit, well, if you're talking about a digital training system that you could.
No, that will. No, I'm talking about a completely different one. We're going to talk about it later.
Is this the lawyer stuff?
Yeah. Because, dude, I mean, that's what it's doing.
Yeah. Are you in it?
Yeah.
Yeah. Well, let's see how that one works out.
Well, it's working out beautiful so far.
Pretty good so far.
And it's been working out beautiful for my friends for 3 to 4 years, maybe. Mm-hmm. So, yeah, I mean, anything can end, but it's like, It's not illegal.
Yeah.
It's not, I think someone just found one of those.
Loopholes.
A little loophole. Like, hey, this is pretty clever. Let's keep doing this, and let's not go too crazy.
So these settlements that they're fronting the money for.
I don't know what you're talking about, dog. What you mean? I don't even know what you mean. Let's change the subject.
All right.
Hey, let me ask you this.
Yeah.
What should people invest in right now?
I mean, first of all, we just talked about your own business. If
but like stocks, you can't give stock advice.
I can't give specific stock
advice.
But
you do it on Fox News.
Well, it's a little different, the context in which I do it there. What I'll tell you is this, right? If you're a young investor, you should be looking at some of these big companies and considering names like Zoom, considering names like DocuSign,
Apple,
considering names like, I mean, not Apple's kind of the old tech, right? The Apple, Amazon,
Google.
Google
ain't going nowhere,
those
bro.
are like the blue chips, right? So I think you should be in those, right? I think those are the core holdings. But Google's kind of like the new Coca-Cola, right? Google's a staple. Google has a fortress balance sheet. Apple has a fortress balance sheet.
What's that mean, fortress?
Oh, like you just can't touch it. I mean, they're so solid. They've got so much cash on their balance sheet, zero debt. These companies are in way better shape than our traditional blue chip, old stodgy stocks like General Electric and those companies. So yeah, those are companies you should own as a young investor, but start kind of pushing the needle. Look at some of these Shopify type of names. Some of these names like Airbnb, some of the new names.
But how do you look at them? You just hear about them and look them up?
I mean, just start, start watching Fox Business, start watching CNBC, become a student of the game, start listening to some of these things, get on Yahoo Finance. The fact that you got 35-year-olds walking around that don't understand the stock market, it's unexcusable.
Yeah, I'm one of them, dude, and I'm 52.
You better get in my course.
Well, someone said the other day, they shorted this and they shorted that, and I'm like, I don't understand how they can short more than it exists.
Yeah.
Like, how is this possible? It doesn't make sense to me.
GameStop and EMC.
Any of them.
Yeah.
They don't do it just GameStop. That's where they got clipped.
Yeah.
They do it all the time. They sell more shares than exist.
Because it's allowed right now.
I don't understand that.
Yeah,
like it's crazy.
Well,
how can they share?
We print more dollars than we can pay. Right? We just launch more debt. So it's kind of the same thing, right? As some of these brokerage firms take on a lot more risk by lending in excess or letting them short in excess of what.
But how do you sell 150% of stock?
It's not there. It's fictitious.
Then they shouldn't be allowed to do it.
That's the problem. That's why the SEC is grilling these guys right now.
And why? And by the way, why do these financial crooks, crooks, am I right, get away with this shit?
Well, I mean, a lot of people that were doing the shorting were retail investors also. So
no. There's some crooks on Wall Street. Yes or no?
Oh, there's
like
crooks
like
everywhere.
Jordan Belfort as an example.
Who?
Jordan Belfort, Wolf of Wall Street.
Yeah, of course.
His ass got fucking put to jail.
Yeah.
And a whole bunch of people does what he did.
Oh, all the time. Yeah.
So why aren't they going to jail?
I mean, they do, but a lot of times they don't get caught. Right? They do, and they don't get caught. And there's levels of crooks. You've got what Jordan did. You've got what Bernie Madoff did. Well, that's kind of the worst, right? Madoff just stole money from. That was just a Ponzi scheme, right? And then you have people that are just kind of riding the edge, right? And then you got people that are maybe front running some people, so they're going out there and buying the stock first and then pumping it up on Reddit and stuff like that. You're going to see some of these Reddit guys. Because that's the other problem.
Could they go to jail?
They don't realize what they're doing is illegal. They don't understand securities law until they got handcuffs on them. So for those, you guys that are out there like pumping stuff up on Reddit and all those things, take some time and Google securities law and Google churning, Google front running. It's very borderline, some of the things they're doing. And now what you're seeing, the challenge is where most of this volume is some of these low price stocks, $2, $3 stocks that trade on the bulletin board, not on the NASDAQ. It's a secondary exchange where just like Bitcoin, there's not a lot of volatility. There's not a lot of float. So you can push those names up. So they buy them at 10 cents. Then they get all their buddies together and they start telling everyone else to buy them. And that's basically what Jordan was doing, right? It was buying these penny stocks and then dumping out of them. Right, so you got to be really careful with that stuff. Stay away from bulletin board penny stocks. Don't get on there. And look, people are watching, right? Don't get on there and start talking about what you're doing, and because whether or not you know it, what they say, ignorance is no excuse. So be careful with that stuff.
Should LightSpeed go public?
That's tough for me to say. I think I see LightSpeed probably more as a private equity play. Right, where they kind of roll that up with maybe some other companies like you. I won't say any names of your competitors.
Well, I would roll them up.
Yeah, like that. So you basically get the funding and backing from private equity, kind of like what I did, right? Mine was a publicly traded company, but it's the same private equity model they took with me, where they came and invested in us, took our model. I'm the smallest firm of all the firms we've bought so far. But and we talked about this just earlier before I came in here. When you're starting a business, I invested in the best technology. I bought Salesforce, everything. because I created my business not to be $1 billion business, but to be $100 billion or $150 billion business. And because I looked at it that way and created my business that way, my multiplier was much higher. Because they said, shit, we can come in and we can be $100-200 billion business with this infrastructure and framework.
Yeah, you built the processes and the
built
systems.
The process, right?
You didn't cheap roll it.
Exactly. No, you can't.
Well, I got a guy over here. We'll talk about it at dinner, but
yeah,
he says you can go public. I can get you public on the NASDAQ, ticker symbols LSVT, which is cool.
Yep.
Like within probably 6 months. He goes, I got a SPAC right now, or we can do a reverse.
No, we can SPAC,
you know, we can do a bunch of shit. And I'm like, well, ultimately, what does that mean?
Mm-hmm.
You know, what does that mean to me?
Mm-hmm.
But I don't understand it very well. So not only 35-year-olds don't get it, dude, a lot of people don't get it, and they should get it, which is why I'm happy you got the VT.
Yeah.
You got, you know, levels of it to where it's like everybody should be taking the academy. Then you got the whole personal wealth, you know, level.
Yep.
And then you've got the old entrepreneurs level.
Yep.
What's that? What's the difference between that and personal wealth?
Yeah, so I've got 2 tracks, which is one CEO lab, which is the entrepreneur, and the wealth lab, which is for personal wealth. And so when I started talking to you, Brad, you brought this to me and said, hey, let's take this and let's democratize it. Let's get more people this information and access to empower them. And so I started thinking about, well, how am I going to do that? And I thought, you know, a couple of things. Number one, people need financial literacy.
Period.
Like you said, there's no program out there. And I think you asked me last time why I came back now that I have the program is, well, where can people go? Even when you get a finance degree, you don't learn all you need to know about the stock market.
But even kids, like if parents are listening to this and you have a 17-year-old, 16-year-old, 18-year-old, like get this shit for them.
For sure.
Financial literacy is a big reason why a lot of people have no money, no stability. No, they got no clue.
They don't. So I didn't know how to do anything without first teaching people financial literacy about everything. And we're going to teach the stock market, the bond market, how to allocate your cash, you know, how much when you're 22 should you be putting in stocks versus bonds versus your emergency fund versus Bitcoin. We're teaching people that. What is shorting a stock? What is going long a stock? What is buying options? What is selling covered calls? We're going to do all that for people step by step, right? And the way I do that is we have the VT where they go through and they train and they take tests and they're learning and there's repetition to be able to get that ingrained because no one learns this in a year. But then we also do live weekly Zooms where we build on that information because the other thing I said is that to be able to give people good information, it needs to be real time. Because the financial markets change day to day. So I can't put out just one training program and it's good forever. So we have live classes every Tuesday where I'm on there teaching people about, hey, what's going on this week and how do we apply that to our core information. And then the other thing is entrepreneurism, because like we asked is what is the best investment? It's building your own business. And I've been doing this for 22 years. I work with I just got, named Forbes one of the top advisors in the state. How do I do that? Because I have some really good clients that have a lot of money. And how do they get that money? The vast majority of them sold a business, or the vast majority of them are kicking up so much free cash flow from their business on an annual basis that they're investing that money. They didn't start with a stock. They started with the business and they're like, shit, I got this extra $2 million a year that I don't need to spend that my business generates. Because not every business, quite honestly, is really set up for the big exit, but they're great cash flow generators. So a lot of people just keep them in their family for a long time. And it's that cash flow that those start kicking off that they start feeding into the business. So with that in mind, it's like if I want to get people wealthy, and everyone's bitching about the wealth gap out there, but no one's doing anything. The only way that you're not going to solve it through government programs. The traditional education system's already broken. The way you're going to solve that is through financial literacy and teaching people how to create a business. And that's what I'm doing. So in order to solve that, we're going to teach people how to build a business, put them in a position to be successful. And then obviously you have to have financial literacy to be able to run a business. And so we teach both simultaneously. So I give them both for the price of one. I was going to originally give them 2 deals, but we put it all in there and I teach it all. And I love it. I mean, we're impacting so much. I've only been doing it for 6 weeks, but I'll tell you, I'm honestly more rewarded by the people that are in my VT program than the people that I've worked with for 22 years because they're so appreciative and we're impacting a lot more lives.
Because when you have a bunch of money, they're almost like expecting.
Exactly.
Almost like, dude, do your job.
It's exactly it.
Let me know what I made.
It's exactly it.
Everybody else that like shouldn't normally even get access to you is like very appreciative.
Well, it's true. And that's the problem though, dude. In our business, to get and we talked about this last time, a financial advisor in the U.S. doesn't even have to have a high school diploma. and some of them don't.
Dude, we need to make a course for financial advisors.
Yeah, that's going to be next. We're going to do that, right? Because there's a lot of financial advisors that don't know what they're doing.
Yeah, and we need to do one for kids.
Yep.
Okay. I mean, you kind of look like a cartoon. Kids will love you.
No,
he's got like these big old arms that look like they're freaking cartoon arms. Oh, Rob Luna, dude, I like the fact that you want to give back to the well, not give back, but I mean, help the little guy.
Well, I mean, that's where I was before we got into the cartoon arms. That's kind of where I was going with this, right? is to get a decent financial advisor. Like even at my firm, our entry level advisor, he's just starting out. His minimum's $500,000, right? And most guys, I got to $1 million minimum very early in my career.
What's that mean? That
you have to have $1 million to give. You have to come into our firm and give us a check or transfer stock or transfer something that's worth $500,000, right? And that's kind of the bare entry.
Even to talk to you.
Yeah, well, I mean, I'll talk to you, but I mean, for us to manage your money or give you advice, you have to have $500,000 in assets. For me, it's $5 million right now.
Yeah, but my question is, so let's say I send you $5 million. You're not going to educate me. You're going to manage it for me, correct? Well, don't I just hand you money and walk away and then inspect what you did?
Yeah, our clients are delegators, right? And a lot of it's because they are entrepreneurs. They're successful. They don't want to pull the lever on everything. They don't want to worry about all those things, and that's cool, right? But it's the old adage, like give a man a fish versus teach him to fish.
Yeah, but that means that the people with the money have the less value than the ones with the VT.
They will. I mean,
because if I give you $5 million and you make me money, hallelujah. I didn't learn a fucking thing.
Right.
I just let you do it.
It's true.
But if I took your VT, I'd learn how to do it, and now I'd know 10 times more to where I got the $5 million. And then not only can I, keep doing it for myself, because it's not real difficult. You just got to know what to do, correct?
It's not hard at all.
Like there's
I'm not that
E-Trade.
smart of a guy, honestly.
But there's Scott Trade, E-Trade. Like I can make the same moves as you if I knew what to do, correct?
And you do it right. Just like we talked about building a business. The first thing I teach is, and what I did is I took something called a liability-driven investment approach. And all that means it's how big endowments manage their money, that asset allocation. We talked about how they diversify the assets. I took that, which is very complex and will make most people just want to poke their eyes out, and I put it into something called the bucket system. So there's 4 buckets, right? And everyone understands 4 buckets, and I teach you what goes in bucket 1, what goes in bucket 2, 3, and 4. So we set
ratio-wise,
right? And then when you get older, what do you move? How do you move it? And all those things. And I give you weekly updates on what to do, right? So they understand the process first, just like building a business.
What's an endowment? Because I every time I've heard like when I was getting babysat or changed my diaper, people always go, "Wow, he's endowed." What is that? An endowment.
It's a different kind of endowments, like what the university would have. The Harvard endowments, or the money that goes into there. You're just bullshit.
What about union money? Like, do they invest it?
Pension fund money, union money. That's large institutional money managers.
But is that like they give it to firms like yours?
Yeah, exactly.
So what have you watched Billions?
I have.
Comparatively, who are you at Axelrod's place?
Yeah, so at Axelrod, and I used to work for a hedge fund. They're basically a strategy. So they're
Axe Capital.
Axe Capital. They're a hedge fund, so that would be considered an alternative asset class. And so they're doing things like just maybe buying 10 stocks or shorting stocks, non-traditional types of things in a hedge fund.
But they're wanting people to invest with them. Yeah. Give me your money, Bobby.
So mostly hedge funds, and I used to work at a hedge fund. We did fund-to-fund strategies. So we're a wealth management firm. So like I said, we do everything. Classic cars, we don't do it personally, but we allocate to that and manage it. So we will allocate maybe 10, if our client has 10 million, we'll allocate maybe 10% to hedge funds. So that would go to Axelrod, let's say that $1 million. So he's not really going to the average guy. He's going to investment advisory firms like us who have billions to try to get capital from us. They're not going to, go one person at a time normally. So most people don't get direct access to those funds unless they come through someone like us. Like we work with Blackstone. I have millions and millions of dollars, and I have personal money with Blackstone that we've allocated to them. They're the largest owner of real estate in the world, if anyone needs to know about Blackstone. You can't just go to Blackstone yourself, though. You have to come to one of us, an advisory firm, to get into them.
You've heard of Glenn Stearns, undercover billionaire?
Yeah.
I just had him on the other day. He sold to Blackstone.
Okay, yeah. I mean, they're the largest private equity firm out there. I mean, they're the real deal. So you sold to Blackstone. Congratulations, because you ran a pretty tight ship, because those guys don't buy dog shit.
Oh, he sold big.
Yeah.
Glenn Stearns. I think I bet you he's a billionaire. The net worth calculator on Google says 600 million. Those are usually
That's
wrong.
so wrong because I have a lot of clients I can't mention by name because of NDAs, but obviously I know what they're worth, and sometimes they're way off. Usually to the low side, actually, in terms of my clients.
I mean, it says low.
Yeah,
that's what I'm saying.
Yeah.
So this says 600 million on him. So I think he's a billionaire because, dude, he was spending, I think he said $1 million a month just on staff cruising around in his 200-foot yacht, going everywhere around the world.
You're not doing that if you were 600 mil.
$1 million a month. Oh,
yeah.
You're not?
If your burn rate's 12, it's not going to happen, man.
Why? You can last 50 years that way.
That's just on that, though. I'm sure he's got other expenses besides.
But listen, if you got that much money and you're burning 12, isn't your 500 million at 10% picking up 50?
Potential, but what other expenses does he have?
Well, I don't know, bro. He sold out and basically found out he got cancer and said, screw it. He went and bought a 200-foot yacht, which those aren't cheap. He said, the staff to run the yacht was 16 people. He took his whole family.
Just to gas that thing up.
Ex-wife included. You got to hear the podcast, dude.
Yeah, I'll have to listen
like
to
Stearns. But anyway, he got cancer, so he didn't do anything, dude. He just literally took his family all around the world on a cruise ship. And then sometimes they'd fly and meet it somewhere else. But like Indonesia, Italy, Straits of Malacca, they were worried about pirates. And we're talking about one of those, but this isn't a boat, this is a ship.
Yeah.
He knows everybody, Glenn Stearns. Like he was telling me stories where the prince kind of got some dude to move so he could park in Monaco to watch the Grand Prix in his yacht. And like the prince is sitting there and, he's like dialed. Access like that.
We gotta get this LightSpeed VT thing going, man.
But I mean, access like that's usually in the B's.
Yeah, that's what I was going to say. That's not M access.
Yeah, I want to be in the B's. How am I going to sell LightSpeed? What should I do? Public or?
It doesn't really matter. I mean, that's not really the focus. Is I don't know your numbers, but we'd have to look.
Chump change.
Yeah,
a couple of Richard Millets.
Well, like you said, he sold to Blackstone. Right,
Glenn Stearns did.
Yeah, that's private equity. That's not going public.
Oh yeah,
yeah. Blackstone's private equity. I mean, private equity is big money, a lot.
But when you go public, can't you raise unlimited funds?
Well, you have to have an IPO price, so you're gonna have it's not necessarily unlimited. You're gonna price. Well, here's what happens too. A lot of times you see, let's say you take LightSpeed VT public, and your underwriters, maybe you go to Goldman Sachs, is going to take you public. Say it's worth $20 a share, and maybe that's a $500 million valuation or whatever it is. You get paid that in the IPO market. Once it goes public, you see these things pop open and they're at 40, they doubled. You don't get any of that. So a lot of times, as LightSpeed VT, you'd be like, well, shit, why didn't we price it at 30 or 35? The people who bought the IPO participate in that, but you sold all your equity to the people who bought it at the IPO price. So that's why there's some different offerings where people are now going into the public market direct. But private equity, I mean, there's some pretty high multiples that are being paid, public market type of multiples for private equity. And a lot of people don't want to deal with the public reporting. It's expensive. It's a pain in the ass. You're under a lot of scrutiny. There's companies that have gone public and then gone right back private. Michael Dell was one of them.
Yeah. I don't like the scrutiny part.
Yeah, no.
So out of curiosity, what is the average amount of money someone needs to basically have enough money coming in, living a, let's say $120? I guess I should say this.
How much $120 life?
Yeah. How much money do you need in the bank to make $120,000 a year for the rest of your life on average?
You want about $3 million.
So $3 million. You think 4%'s conservative number?
Yeah. What I'm doing is I'm taking a 5% distribution rate and then taking some taxes out of it.
So you think 5% is you should be able to make 5% on your money. Period.
Yeah, you should be able. Well, yeah, you should definitely be able to do that. But also you got to understand you got to keep up with inflation because that 120,000 that you need today in 10 years is going to be 160, 170. So there's rules that we kind of use. There's something they say the 4% rule, which allows you to take 4%, increase with inflation every year, and you got about a 95% probability of success of not running out of money. I think it could be done better, so I'm using a 5% number. We've been doing much higher than that, but yeah, the rule of thumb is take 5% for every 50 grand for every million that you put away.
So if I put $100 million in the bank, and when I say in the bank, invested,
you got 5.
I got $5 million a year coming in.
Pre-tax.
Pre-tax.
I think you could deal with that, right? Well, so here's the good thing too,
though. Not that's not jet setting fancy.
No, it's not. But the good thing about the 5 million, so if you're making that 5 million earned income, you're in the 40-something% bracket. Here, though, the good thing about that, you're going to have some munis, you're going to have dividend income. So your blended rate, a lot of our clients are making millions a year off their portfolio distributions, and their blended rate's like 14-15%. Because we got some real estate and some other things in there. So the earned income, you can't do shit to shelter it other than like 401ks and everything. But the actual income, once it becomes passive through your portfolio, is at a much lower rate. So if you're getting 5 million, yeah, normally that's like 2.5, but it's really probably closer to about 4 spendable when it's from passive income.
Folks, if this isn't making any sense to you, I'd go to freaking his VT system and sign up.
Oh, it'll be easy.
Number one, it's chump change. Number two, dude, the knowledge is going to make a massive difference, even if you're letting someone else manage it.
Oh, that's what I tell people. Look, at the end of the day, you might decide, hey, for a part, and you might just find out, hey, I like doing the dividend stocks, but I don't want to do the private equity stuff and all those things. You need to become a better consumer of financial services, because what I'm finding out early, Brad, is a lot of people that are coming to me, and within 4 weeks of being on the course, are like, shit, I got screwed. I'm being taken advantage of, and they're unwinding some of the stuff that some of these guys out there that, again, are the guys that are taking the $50,000 and $30,000 accounts have to, right? And they don't know what the hell they're doing, so they're pitching advice that is bad advice. So the average investor out there, even who thinks and they're trying to do the right thing, many times is not.
So where did you learn to sell and close and persuade? It's clear you know how to sell, close, and persuade. Look at Sabina.
You have to ask her about that one. I'm still scratching my head.
Yeah, how did he close you? Humble? Oh, he's humble. Isn't that
humility?
Nice? See, that was just
I thought
a
it
show.
was my good looks. Yeah, I told you I'm not really a great salesman. You are. My whole thing has always been just be the best, and then let the world know about it, and you attract people. And it's worked for me. That's been my strategy.
Who's your biggest client that you can talk about?
The biggest one I could talk about is, I can't say exactly how much money they have, but one's actually a friend of mine. I did my MBA with him, and he sold his business for quite a bit. And so for me too, my biggest clients, when I say biggest clients, it's the actual money invested with me is how I get paid. So if they invest $100 million with me and they're paying me 1%, I'm getting, you can do the numbers, right? $1 million a year, right?
Just for managing.
For managing the money, right? And so I have some people that have, he has invested over that amount with me. I have clients that are billionaires, but if they only put 50 million with me, it doesn't really matter as much. So for someone, my largest account's a little over 100 million. A lot of billionaires I work with, but maybe I'm managing 50 or 60 million for them.
Dude, and no bullshit, because obviously you don't bullshit. How much would someone have to pay to learn what's in your system, like over time? How much would that be worth?
Dude, so like I'm telling you, so let's look at the CEO Lab, the entrepreneur class I took. I created a strategy roadmap there. I did 2 MBA degrees. I went to Wharton. I've worked with entrepreneurs, built my own business that I sold to a publicly traded company over 22 years. The biggest thing I got from my MBA, and really quite honestly, the only valuable thing that I left with, was that strategy roadmap, because that's what allowed me to say, shit, I didn't build my business right. I went about, reconstructed it. In a business that was only growing 10% a year, I then grew 68%, 78%, and 88% sequentially over 3 years. From that strategy. So that strategy, then my MBA cost me $250,000.
Yeah, so that strategy alone's worth the price of admission.
Yeah, that strategy alone.
Now, there's 4 levels, but can you get them all?
Yeah, I mean, you get everything. I mean, it's a $14.95 one-time enrollment fee, and it's $99 a month. So the first year you pay about $2,500, then it's under $1,200 a year. I'm on there every week.
To talk to you.
To talk to me. And so,
and by the way, you guys see him on Fox News. They're always wanting to talk to him because he's like the authority. So all these newscasters get him and be like, well, Rob, what do you think about this?
Well, and dude, my hourly rate, if you come direct to my firm, it's $12.50 an hour. So if I take the hours that I spend on this VT with the Zooms, it's $50,000. So just my hourly rate, they're getting $50,000 worth of advice, plus the programs that I put in there. plus the amount that people are already going back and saying, shit, I unwound this, and just in fees, I saved myself $4,000 a year. So that's the great thing about wealth management is I always say good wealth manager, even though you're paying me 1%, it's not a cost center.
Yeah.
You're going to make more money because I'm going to lower all the bad mistakes that you're going to make. So we pay for ourselves.
It's like a good CPA.
It's like a good CPA, exactly.
CPAs don't cost you money.
No, they don't.
They make you money.
No, so I think, quite honestly, everyone should have this level of financial literacy. Everyone should start a business.
What age?
What's that?
What age?
I mean, God, they should. I mean, you said. I mean, we should really be teaching our kids this. I have my
Yeah, but
daughter
what age? Like 16? When can they start grasping this
I would
shit?
say 12. I think
12.
Yeah, that's why I just started working with my daughter who just turned 13, starting to buy some stocks.
I mean, if I'm a parent and I have a 12-year-old, should I literally buy that for them?
Absolutely. I mean, they're not going to learn.
Can they understand it though? I mean, I can barely understand what the fuck you're saying right now.
Everyone that does my class, and I do a YouTube channel where I put something out every week, the common consensus is, shit, I didn't understand any of this, and you make it so simple by using buckets, by talking in layman's terms. I don't talk in jargon.
You break it down.
We break it down, make it very simple.
Folks, listen, I wish I could, stand up here and, educate people on the financial market, but listen, I gotta pay people like you. Yep. I gotta pay people like him. Folks, if you're sitting around wondering where you put your money, man, pick up a book. What's a good financial book they could learn if they can't even afford to
I mean, that's the problem. You asked me that last time, Brad. I mean, there's not. I mean,
was it like Money the Game? Remember Tony Robbins? Like, is there any? What is there?
Yeah,
does Charlie Munger have anything?
Tony Robbins is a great speaker. He's not a wealth advisor. Right?
Okay, so who's like the best wealth? Where do you get your info? You got to do studying. It's almost like sports picking. You go and figure out the teams and who's coaching.
So here's the thing: where I get my info now. So I used to read Benjamin Graham, which is who taught Warren Buffett and all those guys about value investing and all those things, but now that I've built the framework, just like when you build a business framework, it's really, I just get data now. So I pay a lot for data because I know how to interpret that data and I know how to execute on the data. So I'm not really, and maybe it sounds arrogant, I'm not looking at anyone else. I got to about, 10 years ago, I've been in the business 22 years, or maybe it was 8 years ago, where I was buying everyone's shit. I was listening to everyone's newsletters, and I was doing my own stuff kind of on the side, but I was using their stuff for clients. I'm like, I'm just doing really a lot better myself. And then I started having conviction, like, shit, you know what you're doing now. Now I need the data. I get stuff from Bloomberg. I get stuff from FactSet. So I need to know what companies are reporting. I go out and talk to managers. So I talk to executives at Google. I've talked to executives at Amazon. So that the great thing about being on the media is I have the ability to get on the phone and talk to those guys. I talk to them and find out what's going on in your marketplace. So I'm getting real-time data, and I know how to interpret it and execute on it. And that's where everyone wants to get to in whatever it is not just consistently relying on someone else, even me. And that's what I'm telling people. Don't listen to me. And a lot of what I teach came from professors and all those things.
No, but that's what I'm saying. Listen to you. In other words,
yeah.
People ain't going to get this on their own.
No,
and you've already spent the time and effort. So why don't people just go to Wealth Talk podcast, your Wealth Talk podcast?
That's free.
Yeah, go
Friday.
to Rob Luna YouTube channel. There's a YouTube channel, probably Luna Rob or something.
Yep, the Luna Rob.
Yeah, so go
Luna Rob, youtube.com/Luna Rob.
Yeah, but that's free.
Well, that's the thing.
So you're doing all kinds of shit.
We said let's democratize information. Well, I got to do something for free. So I put 15 minutes out every Friday. Today, what I came in is I talked about what the market's doing this week. Why is the market selling off? It's because the 10-year bond is rallying. All these other things. So I'm telling people, explaining to them in layman's terms what is going on right now. I do that every week for free.
Boom. Folks, if you guys are smart, I'd be following Rob Luna. If you're not smart, I'd be following Rob Luna. Either way, I'd be following Rob. And I would highly recommend you go get the VT, mainly because it's on LightSpeed, but even then, dude, if your kids or you or people you're fond of don't have any financial literacy, it'll stick them in the rear.
Yeah, like I said, it's $14.95, one time $99 a month. Anyone who listens to this,
$15. How can you go wrong?
Anyone who listens to this, I'm going to take $4.95 off for the first month that we air it, though. So if we'll create a code. You got to tell them the code. It'll be dropping bombs.
All right. How about just bombs? That's a long ass code.
Yeah, bombs.
All right. If you guys put in bombs, you're going to get freaking a big chunk of dough off. That's the first. That's the first return on listening to dropping bombs in the history. Folks, you're getting paid to listen to dropping bombs, but only if you take action. Dude, most people are like, dude, you don't really sell shit on here. Dude, I'll sell this. And here's why. Years I spent not really understanding it. And I'm telling you right now, it was a mistake. I wish I would have paid attention, understood it. Number one, I mean, again, financial literacy for any kid is the difference between staying broke and being comfortable, if you ask me.
Right.
It's not that hard once you break it down. Do you have like, basic finance 101 in here too?
Yeah, I mean, it's super.
It's not just investing; it's finance.
We do everything, and I'm working on a brand new. And here's the good thing: is when you're an Academy member, I'm going to be doing some separate one-off courses that I'm creating one right now, just on everything you need to know about the stock market, everything from A to Z. It'll be about a 2-hour VT program. I'm going to sell it for probably $600. But if you're in the Academy, it's getting dropped in there for free.
See, this is stupid, dude. I mean, people can pay $50,000 for this information. Yep. You go get it right now from Rob Luna, who, by the way, is the leading authority in that space. Now, if you would do me a favor, Bomb Squad, share this out so other people might hear this. Financial literacy needs to be all over the planet. Rob, I appreciate you coming up. I know Sabina's ready to go.
She's ready to go.
See, she doesn't even care what we're talking about.
Thanks, brother. I appreciate it.
My pleasure. And thanks for coming up. As always, kids, keep it real.
Dropping bombs with the real Bradley. Subscribe now.